Hi, friends. Today, I'd like to discuss something with you that most people know they should be doing, yet almost no one does on a consistent basis: rebalancing your investment portfolio. Rebalancing, put simply, is moving your portfolio back to your target investment allocation as the market moves up or down. The problem is that for most people, they do not have a defined target investment allocation nor a defined investment strategy. At Presilium, we start each relationship by building a financial plan that provides a clear path for our clients to reach their goals. We then use this plan as a guide to decide on an appropriate mix of stocks, bonds, and cash, and then adjust our clients' investments to match this mix. The final step, which is so important, is to consistently adjust their portfolio back to their target allocation as the market moves up or down. As an example, after discussing your financial plan, we decide together that holding 70% stock and 30% bonds over the long term will likely put you in the best position to reach all of your financial goals. Immediately, the market goes up significantly, and now you suddenly hold 80% stock and only 20% bonds. At this point, you hold much more stock than you originally intended, and you face a significant increase in risk. This is why it is so important to rebalance. Here, we would sell a portion of the holdings that have gone up in price and are now relatively more expensive to bring your overall mix back to 70% stock and 30% bonds, decreasing your overall risk at the same time. Let's look at the opposite example next. Stocks fall in value instead, and you now hold only 60% in stock and 40% in bonds. You should then add to your stock holdings at the now lower prices to bring your overall allocation back to 70% stock and 30% bonds. Otherwise, your portfolio may be more conservative than you originally intended, which increases the risk to your plan's overall success in its own right, and you may not get the full benefit when the markets begin to move back up again. At Presilium, we rebalance our clients' accounts every time the S&P 500 moves up or down 5% from the last time we rebalanced. This allows us to remain very proactive and opportunistic amidst the fast-moving markets often seen during times of volatility, as opposed to a more passive approach like never rebalancing or only rebalancing quarterly or annually, where you may miss great buying and selling opportunities along the way. Thank you, and I look forward to talking with you next Friday.